for sweep close to this one. Uh, in Hello everyone, welcome to this trade recap on the 30th of September 2025. Today I took a long on the NASDAQ at 9:45 and got stopped out at 9:51. So today we'll review this one and say why did I make this mistake and why did I take the trade. So first thing first, why did I take the trade? I saw a sweep. It's not a proper sweep, but because I was waiting for an inverse fair value gap or a fair value gap to get formed uh, right before or after the sweep, but it's not a clean one. So instead, I was looking for a sweep close to this one. Versus fair value gap close to this one. So as we can see, there's one here. But it isn't very like valid because it's not that low, so it's not that important. Uh, but I saw it as an important point because I saw my model getting formed. As we can see, the wicks touched the 50% of this inverse fair value gap. We see a pattern, right, in my entries and in my reflections. It's a lot about fair value gaps and inverse fair value gaps. It's imbalances in prices. It's an imbalance point that price tends to get back to. And it's a very interesting point in price action. But as we can see, I got stopped out just below this fair value gap. Um, because my stop was below it. I put it here, right? Above the body of this candle. So I got stopped out. Ended up on a $257 loss. Sorry. I don't know why it's not working. There you go. Fair enough. 257. So you can see that price action on the hourly time frame is pretty much in a downtrend, pretty much feeling an imbalance towards these levels. I think it was in an uptrend over here, but did a little reverse of that level, maybe to fill up imbalances or do a retrace. So I was waiting for the day that I was waiting today for price to come back at these levels and going back up. What is end up happening, of course, but I think that my entry wasn't that much optimized on the NASDAQ. Um, yeah, see, that was way proper. For example, there's the inverse fair value gap here, end up being respected. Fair value gap here, being end up being respected too. So there's another unicorn model, but we couldn't know because price just keeps consolidating. I could have entered here. I could have waited to enter it here, but I didn't. That's why I ended up in a loss, right? Unfortunately, but it's fine. I don't really care because the important thing is to follow the plan, right? Is to you protecting yourself. If you follow your plan, you protect yourself from losing all your money on your funded account or personal account, whatever. So we're gonna remove these unnecessary gaps. Yeah, I could have entered here. It's acceptable. If I entered off of these levels, Could have put my stop loss over here, you know, under the wick of the low and targeted. For example, I could have targeted like these levels only here, you know, just here, here, of these levels here. Could have targeted here, only here, or here, oops, or here. It was gonna play out, you know. But unfortunately, I didn't wait for a clean um, sweep of price. You know, you can't tell me that that is very a clean sweep, you know. That is clean. It goes under the level, reacts immediately with a fair value gap and an inverse. Only an inverse fair value gap. Sorry, there's no apparent fair value gap. We can see that price consolidate here and then make does a last sweep of this low and then boom, go back up with a lot of bullish momentum. So meanwhile, on the S&P 500, it consolidated above these levels. I'm saying consolidation, but it's not very consolidating, but it's staying in the same price rectangle, you know. Before sweeping his London lows, London low. But we can see that New York stayed on the level of his London low way more often. Like here, here, here. Last one here. If I was a bit more patient for a clean sweep and a clean retest, sorry. Voice crack is crazy. It could have been like much better, you know. But yeah, that's we can see that on job openings, like it didn't do that much impact on the price today. But yeah, it's always important to see when you enter your trade because on a lot of prop firms they don't allow you to trade like news event. So you have to be careful because it can get you off guard. But that's pretty much it. 57 loss. And by the way, I gotta say something. You know, on my for my channel, when I don't post videos, well, it's pretty much because I don't take a trade. I don't take a trade at all, and I analyze the market, and I don't find it interesting enough to take a trade. You know, so I just don't trade. If I couldn't take that trade or something happened, well, I'm gonna make a video to explain, to recap, to non-trade recap, just the video I did the other day. But it's very interesting to know what's happening with price action, you know, every morning, you know, because my strategy is very basic, and if I'm constant with it, if I'm disciplined with it, well, we can see some real improvement on the trades I take. So, exactly. Thank you very much for watching my video, and that's pretty much it. See you all.